Hi folks, this is Lee Gettess with the Market Sense for the week of May 11th, 2010. As always, the charts we use are provided from the Trade Navigator software courtesy of Gettess Financial Technologies. We got a lot of different stuff here than the last time we talked. This is the bond market, and as you can see, last week had an incredible blowout to the upside, primarily a flight to quality due to fear of what was going on in Greece and numerous other things. Clearly quite a bit overdone. It took way above these old highs here from late 2009 and up into the mid 124 area. And now they've dropped back down and they're hanging right on an area that could indeed provide support. The red line there is about 120.16, and that could very well be support for the week. It could be, but the move is so tremendously overdone that a move down to the blue and green line down here, which is about, let's call it 118.26, 119, that would kind of make sense for them to go that far. I mean, you've got all these old highs here that they broke out from that they kind of tend to go down and test, and that's sort of in that vicinity. So there's still a possibility that they could drop that far. If they do think this is support, and they do maybe have another reason to get scared and rally again, the next blue line up there is around 124.28. I certainly can't say that that's not going to happen, but I just think the move last week was probably overdone. The fear was a little bit overblown, I think. Moving to the stock market, now this is where we have just a huge amount of change. After rallying for 2 months on incredibly low volatility, we get a huge uptick in volatility last week. They just kind of explode, if you will. But let me put this in perspective. They could have stopped at the red line. They didn't. They should have probably stopped at the middle purple line you see there in the Keltner channels, but they did not. They've gone all the way down to the lower Keltner, which is still support. And most importantly, the last swing low we have is way back here in February. They've gone nothing but straight up from there until this breakdown. So consequently, what do we have? Well, we still have the potential for them to make a higher swing low here. That being the case, despite how big this sell-off was, the trend is still up. It helps to keep perspective. As nasty and scary as that sell-off was, and, who cares what the media says the reason was for it. Either way, it's probably overdone, and it probably does not change the trend. It makes this week kind of a little squirrely. They did not stop at the red line, so they're not in incredible problem. They're not really weak, and the sky isn't falling. The green line, which is the next logical place for them to go, is about 1172.50. I think that's reasonable, but even 1186 up at the blue line, or the red line, which would be back up testing the highs almost up there, is 1210. And all of those are really actually possible. I got to tell you, I'm not predicting this, but I would not be shocked to still see them make new highs before the month's out. And I expect they will do it over the summer if they don't do it this month. But anyway, the important thing here in stocks, I think, is to recognize that despite how ugly and scary the sell-off was last week, the trend really is still up. It's not the end of the world, and how they handle this week, well, how much you want to bet it's an inside week? That's the likely possibility, right? So hard to find anything to do this week at all. I'd say I hope you can find anything to do, but sometimes the right thing to do is nothing, and that's sort of an important thing with trading. So that's what we've got for you this week. Best of luck with whatever you decide to look at, and let's try it again next week. Thank you.